Hello, everyone. Welcome to Massive Masters Raising Private Capital. My name is Maria Marks, and I am the host for today. We're so excited you are here. If you are watching live, thank you so much. If not, if you're listening later, we are so excited to have you here and hope that you can make it to one of our live recordings. Just a quick disclaimer. We have not properly vetted anyone that we are talking to on any of our calls. So if you do hear something that you like, please make sure to do your own research on any of our hosts and co-hosts that we have. Massive Capital as a whole is a vertically integrated real estate company. We have a lot of things to offer, a lot of experience at our side. We have raised 175 million assets under management. We've partnered with Realty One, whose total is 290 million assets under management. We are located across several states in the United States and continuing to grow. We have one opportunity today that we are talking about. It is Horizon. We closed on this in January, the end of January. It is our last opportunity for the moment, and we have a few spots left. So if you have not gotten in on this deal, please reach out to us, and we'd love to have a conversation with you about it. Today, we have one of my favorite people. His name is Gabe Bowling. Gabe has raised over 100 million. And let me say that one more time, just in case you can't hear it in the back. $100 million at Cardone Capital through 22 institutional deals. He founded Bowling Capital, which has 45 million assets under management, and he raised personally over $5 million of equity with Bowling Capital. He runs the Deal Room, which is a community with 250 plus investors across the entire country. Gabe, we are so excited to have you here today.
Well, thank you very much for hyping me up like that. I'm just a deal guy. I'm ready to do deals. Let's go.
You're ready to do deals? Just the deal guy? I don't think so. I don't think so at all.
We'll see. But that's what, if I could be remembered for anything, it's just the deal guy. Like, we'll do a lot in life, but the deal guy. Let's just do a deal.
Let's do a deal. All right. I like that. So, Mr. Deal Guy, walk me through your experience in capital raising and why and how you've raised so much capital.
Yeah, well, under the Bowling Capital hood, it's only 5 million bucks. So I don't know if that's a lot or a little to you. I think it's small in comparison, to where I come from. So that's kind of like where I got the first initial round of experience working at Cardone Capital. Just to give you some context, I got lucky with the job. Like, I worked at Marcus and Millichap. It's a brokerage selling real estate deals, and I just had enough experience to land the job. I wanted money. Like, that's why I took the job. I didn't know that I would accidentally fall into a fantastic, incredible, life-changing opportunity. Like most people don't, it just happens. I started there in 2019, and I knew what cap rate was. Like, that was it. I didn't know preferred, I didn't know anything. And through, I don't know, over 10,000 phone calls over a 3-year period and $100 million raised from retail investors, one person at a time, 100 grand, 200 grand, 500 grand, a million, 50 grand, $5,000, non-accredited money, accredited money. You learn a little bit. And then starting there early at Fund 3, I was in early enough where I had a lot of opportunity to take on responsibility and grow as a leader. And so I was able to train a team and kind of be able to be the driver and a funnel. I think that gets people excited for raising capital. Finding leads, talking to them, how to get them to convert over to an investment, nurturing the relationship. So that was fun. Like, it was really fun to build out and be a part of a team that I think at the height when I was there, we were raising 250 million bucks a year. I started at Fund 3 and I left at Fund 22. And I think it was 22 transactions total, 900 million collectively raised, and then I was 100 of it. So it was a core team of 4. But that's my experience. I learned the inside of the private equity world and how to sign a subscription agreement and get an accreditation letter. And then I broke off, and that was kind of like it was a big ego check for me because I was raising a ton of money using Grant's reputation and Grant's brand and Grant's name. And then Grant would get the leads in. And so it's just, I was like a sales guy / an investment relations person, just processing paperwork. And then I broke off and tried to do my first deal. That was like a slap in the face because I couldn't,
Well,
I only raised.
let's talk about that though.
Yeah.
I mean, you went from being able to use someone else's name to now using your
Yeah.
name. Like
Yeah,
what was that like?
much different approach. I found out a lot of people liked me because I worked there, but they wouldn't invest with me because I worked. I was like, I wasn't like I didn't go to school. I have an AA. It sounds better if I just say I dropped out, to be honest. And at the time I was 24, so I was like
Right.
24-year-old kid. The people that I was asking to invest with me had kids and sons and daughters the same age as me, and so it was like they look at it as like, is this guy really experienced? I get that he worked at Grant's office and that's cool, but like, should I really give him 50 grand or 100 grand or 200 grand was my largest investor? And a lot of no's, like management of expectations. The first one is going to suck. Just
Hmm.
get over it. The first one's going to suck. You're going to get told no a lot. But if you manage your expectations to just get over it anyways, and then you get the first one done, it's literally like people, it's the way that the business kind of I don't know, in sororities and like fraternities, there's like a initiation period.
Yeah.
I kind of look at it as like, attorneys and doctors and dentists, like all these super specialized skill sets. You typically have to go through like some terrible period for the first year. And then once you're done with it and you're like, everything from there is much easier, like much easier because you build the momentum off of the first one and the second one and the third one. But the first one's the hardest, 100% the hardest.
You went through your own initiation hell week is what you're thinking about.
Yeah, pretty much Hell Week. But it was to the tune of like,
Lasted.
it was a 120-day Hell Week. And you definitely go through some mental fortitude. Like you build some character going through it. I think you need that if you're going to last in this business. You really do need it because it's not flipping a home and going and finding a lender who doesn't take any risk and gets 12% on their money. It's like they're equity partners, they're in, they have to believe in you and your ability to actually execute the business plan because if it doesn't go well, they lose money. And so it's a big, big, big difference from like being able to find that equity. It's very easy to find 12% debt on a single family home. Very tough to get somebody to put 100 grand in with you. And if you don't do your job well, you lose it, all of it.
So something that you're good at that I feel like maybe some of the older people might not be so good at is social media. And I
Yeah.
love that you're good at that. Was that your kind of key into getting started? Was that social media?
Yeah, I mean, I raised I think it was $1,025,000. It's $1,000,000 for the first deal. 7 of the 12 investors came from social media. They were long term, like I worked at Grant's office, and so working there, it's like, oh man, you're cool. You work for him. I want to be, I want to see what you do. Because if you look at a lot of the people who come and go from that environment, they actually go out and create some very successful businesses. And so, we had a small, very small following in comparison to where we're at today. And we're still very small. But the money came from 7 people that liked, knew me, trusted me enough to take the risk on me because I was a risk premium. You are in anybody's
Right.
first deal. You have to understand, like, if I'm going to offer a 15% return and I have a track record and trust and people like know me, and you're brand new and you're offering the same 15, like you are a risk premium. They're going to choose me every single day. So, know that you have to understand it. Yeah, I had my largest investor in the deal that we just closed was a 2-year making. Like it is 2 years in the making. He didn't invest with me for the first deal. He didn't invest. I didn't even ask him to invest with me in the second deal because I knew it wouldn't. I knew that wasn't the first one that we wanted to start the relationship with. And then we just closed on a brand new 2023 product in St. Pete called the Levi. Um, Fell in love with it. Put $500,000 with me. Tested it. Like tested me. Like his 500,000 is 50 grand to most accredited investors. And so
Right.
that all of that started with an Instagram follow, and then he followed back, and then me just posting on my stories. Like if you follow me, it's at multifamily. If you follow me, it's like every single day you're gonna see something. Probably a lot of the deal room or deals. Like here's the underwriting, here's why I like the deal. And you just show. Like I just show. That's what I learned at Grant's office for the social media thing. It's it serves if you think about it, if you're a business owner, your email list, the people that you send your emails to is like the most valuable thing that you have. I look at social media as a living email list that if I post a story, it's the same thing as me sending an email to 15,000 people, but it's not words and it's not annoying and it doesn't go to spam and promotional. Like I got their attention. I won't tell you the person, but it is a he is 10 times, he nets 10 times more than what Grant grosses, just to give you perspective of how large he is. And I found him through social media.
So let's talk about persistence and follow through because that is another huge area where you are the best at. And talk about how long it took you to really get that investor. I know this story personally. Gabe, you and I have been working together for a while. I've been learning from you for at least 2 years now. And I'd love to hear how long it took you to get that investor because a lot of us who are new at capital raising, we think that if we post one time, we post
Yeah,
one story, we post one reel, we're going to raise 1 million,
that's
right?
funny. Sounds
So tell
good.
us about that process. That would be great, right?
Yeah. So it's kind of tough it's not like a one foot all or one fit all answer
Right.
because like that guy, I clearly know that he could be a very valuable investor to me. And it doesn't matter like with that guy, because I put him, and this almost sounds bad, but you have to do this. You are a business and like you are a business and you have to categorize your time and you have to look at like where are you spending your time with who are you talking to? Are you only if you're raising for an accredited only fund and you're only talking to non-accredited people, they're fantastic people, but and you can have the relationship with them. But from an act like from the business standpoint, are you talking to people that you can get investments from? If not, then you are not using your time wisely. So I look at the people that could be like, what's the possibility of them investing 500,000 or 5 million or 10 million or 20 million with me? Over a long period of time. I just have to get the first one. I'm trying to get the first test. Generally speaking, investors test you at the very beginning. So I know that he is a big player and I know it's not going to be quick. The bigger they are, the longer it takes. It's not a quick hit. Um, I know that I want to be top of mind for him, and I don't want to come off as somebody who wants his money today. Like I value the relationship more than I do value the potential investment today. Hey, just wanted to let you know, I actually messaged him. I was like, hey, I know you're a player. I'm a real estate guy, just broke off. Don't know if you invest in real estate. Let me know if you do. Because he's liked a couple of my stuff. I'm like, all right, cool. Let's just shoot my shot. Let's see. We start the relationship and then a dinner is initiated. It's like dating, to be honest. Like it kind of is like, hey, you want to go out to a dinner? We got a dinner and we got to know each other and nothing happened. Another 6 months went by where there was, hey, good to see you. Hope you're doing well. Enjoy, Merry Christmas. The holidays, that's like follow up central for anybody. The small little stuff, happy holidays, all this stuff. And then he sees what I'm doing on social media because I'm showing up every day. Of all the things I'm going to say, that's probably the most important thing. Just show up. And it's the simplest, but it's the thing that nobody does. Like I've been posting every single day. If you go onto my Instagram, you scroll down to like what it looked like from the very beginning, night and day difference. But like I leave it there on purpose so you guys can consistently see the progression and change. Um, because you know what every other capital raiser is going to do. Let's just be honest. Hey, got a new deal. Are you interested? That's gonna,
Obviously.
right? Okay, so that is rhetorical. You have to do that. That's non-negotiable. 100%, hey, raising money for a deal. Or if you're not raising money for a deal, I like to post deals that I'm looking at. Like you can have the exact same conversation that you're going to have with an investor on a deal and how it works, the projected returns, everything, even if you're not under contract on a deal. Hey, I'm looking at deals just like this with these targeted returns. And this is how it would work if we did get this thing. I was taxes, all this stuff. You answer the questions, then you create the relationship, and then you nurture it until you actually have a deal. And instead of asking them last second for the first time ever, you don't have a relationship for 100 grand versus 6 months of planting seeds, like nurturing. Nice to meet you. Hope you're doing well. looking at deals, incredible opportunity coming out. I'm landing on second, third, fourth place all the time. That's something I told the guy. He liked that because he was like, you're disciplined. You're not going to just go out and buy anything just so you can raise money. Do things that other people aren't doing. That's kind of how I approach it. Like, I'm going to do what's expected. Hey, new deal. Hey, do this. How can I be different? We just closed on this deal, the Levi, brand new 2023.
Right.
Uh,
Congratulations.
Thank you very much. This puts us up to 45 million bucks of deals at
Oh,
26. Super cool. In the last 2 years. And so this is little magnet. Like you can take this, stick it on somewhere, and then put it on. And so people can have it. It's customized. A bowling capital offer at Levi, and then I am personally putting a little note and signing it. And so I don't know. It could go in the trash. Don't know. Probably somewhere. Could be on their office desk, could be on a shelf somewhere. All that matters is that they got a package with my handwriting that said Rob or John or Phil or Denise. Thank you. Instead of a massive email that goes out that says, thank you for investing into that. Like that's expected. Like you should do that and then do the thing that's not expected. Hey, I wanted to send you this video, or I wanted to send you this personalized gift. Right, take the time. This is a business, like it's not, you're not selling a car and make a $200 commission and then move on to the next one. This is a relationship service-based business if you're going to be in it for a long period of time.
it's those personal touches that matter because it's not just a one-time investment. These are investors that you could possibly have for life. They could have a whole wall of those,
Yeah,
hopefully.
that's so in business, lifetime value of a customer or a product or a certain like lifetime value instead of one time, lifetime. Like how many times do you buy Starbucks? How many times have you bought Starbucks, even though it's an $8 coffee? Not a lot of revenue, but how many times over how long of a period and to what degree of scale? And so we're in the business of providing great returns, risk adjusted returns over a fair, like our jobs, raising capital, is to allocate capital to the best returns with the least amount of risk. That is our definition, our job description, and we get paid handsomely for doing it. I just went blank. What was the core
That's
question?
okay. No, that's okay because now you brought up another part about mitigating risk. A
Okay.
lot of our investors, they say, "Oh, well, the housing market right now isn't really great," or "How are you going to protect my money?"
Was
How
it
do you mitigate that risk for investors?
Why does it matter, Mr. Investor? Why is the housing market, what do you mean when you say that? And did you read a headline on that? Or what data are you, I don't say it like that. Like I come off a lot friendlier, but I seriously asked the question. Why do you bring that up? So when you see headlines that say housing market in trouble, is that residential, single family home housing, or is that specifically value add multifamily deals in Florida? Oversupply, that was an issue on this deal, on the brand new stuff in Tampa. There's 14,000 units in Tampa that are planned under construction or perspective. A lot of them are happening, but it's a valid reason. That's one of our biggest concerns for brand new product. How do you get comfortable with it? Well, let's go look at the raw data. So I pull up Yardi Matrix, I look at planned under construction and perspective within a 3 mile radius of the Levi. There's 600 units. In a 3 mile radius of St. Pete, there's 10,000 units. 3 mile radius of Tampa, there's 14,000 units. So headlines reads underwater, not good for brand new apartments. Okay, cool. Let's look at the actual deal, the actual address, and let's look at the actual risk assessed with this deal. I always take it back to data, but I always try to listen. Like if you come off of, um, and this is sales, this isn't raising capital or like anything to
Mhm.
do with deals, but sales. If you come off and you are battling, you've lost. You've always like I completely understand that's actually something that a lot of other investors bring up on the front end, especially in today's environment. What we found by what we feel felt found. I understand how you feel. A lot of other investors have felt the same way. This is what we found. That's sales.
Yeah.
Um, never argue, never battle with them. However, a lot of investors just don't know. They're not aware. They're not like they're they invest with you because they want to be passive. They don't want to
Mhm.
be like, they just want to know that you know your stuff most of the time because they're taking a bet on you.
So you're just re asking them those questions, trying to understand where that came from, because at the end of the day, that's not really their reason for not investing. They're just
Yeah,
trying to see
so
how much you know.
I'd go deeper. I have to I have to verify, one, is it a complaint or is it an actionable objection? If it's a complaint and they're trying to say that they don't like the deal because of the location, but in reality it's the returns and they're just trying to be nice, um, we can get around like, okay, other than location, what else? Like and that again is sales training, and
Right?
communication with point A to point B and getting a clear pathway.
I love that. No, we have a lot of new capital raisers, people who are just getting started in the capital raise field.
Yes,
Where
good.
if you were brand new, let's pretend like you've never raised money before, where would you get
Yes.
started?
I'd study the business that I'm getting into and I'd look at
Okay.
other capital raisers. Um, I'd look at the best capital raisers. I'd find a mentor. I'd find a target, a goal, whether it's a person, probably somebody who else is already doing capital raising and has a successful life and has a successful business and they've been doing it for 10 or 20 years. Okay, perfect. What they do to get to where they're at. And then do that 10 other times with 10 different people and figure out the most commonly followed pathway. I think you'll find out that it's not as fast as you think. It's much slower, but it is probably the surest thing that you could ever make a bet on. It's either finding deals or being able to raise money. That's it. Those are the two levers that if you get really good at one of those two, you will make money and you will always be in this business because there is no shortage of deals being found and there's no shortage of money being invested into them. And if you don't have like if you only have deals but no money, no deals get done. If you only have money but no deals get done. You have to have both of them. Um, so starting out, I see a lot of people that skip the education. That's really big for me. I am not the biggest fan of go, 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 skip the foundational learning. Just make the post and raise money and just hope and pray that you're putting money into a good deal. What a lot of capital raisers don't realize is that you're putting your reputation at risk, investing in somebody else's deal that is operating it. So I see people just um, trust the surface level data that the person that they're raising money for is actually good and actually ethical and actually, doing what they're saying they're doing, especially today. Like I've had some
Mhm.
really, really tough conversations with people
Yeah.
over the last 90 days. And it's very real. Like people are losing money. And so I think it's a wake up call for a lot of the people that are entering the business. It's not a reason to stop or it's not a reason to not do it. It's just like why did that happen? Like learn from other people's mistakes. It's because the management of expectations, and again, this is my own opinion,
Hmm.
management of expectations aren't where they should be from getting into the business as a capital raiser. Um, I've raised 5 million bucks with bowling capital. Like with my last name on it, people have given me $5 million and they trust me to allocate the capital into a great deal. If I didn't know what I was doing and I just said, hey, I hope that the operators that I partnered with two people. I get pitched a lot of
Oh,
deals.
I'm sure.
It
I'm
takes
sure you
a
do.
lot of time to get comfortable and partner with somebody for the reasons I'm telling you. Like I've seen a lot of the ugliness. And so, if I've given that $5 million, most of them, if you don't have over 51% of the carried interest, you don't have control. And so that's a really big thing. If you don't have 51, you're not in control. You can have some say so, but you're not the decision maker. And so whoever is, you better damn sure make sure that they're going to do the right thing with their investors' money and your investors' money. Because if they don't, you're on the hook for it. I don't
Right.
think a lot of people actually know that.
It's unfortunate because people are so excited to be on a general partner team or to be a part of a deal that I think that step is so often missed. And that's such a huge thing that we have to be talking about. I'm glad you mentioned it.
Carried interest is a very big thing. That's where
Yeah.
all the money is made in this business. You think about like, okay, I want to get into multifamily. Okay, I want to get in the flipping. Where's the money made in the flip? If I buy something for 100 and I put 50 into it and I sell it for 200, the money is very clear. We made 50. Like that's the profit. Okay, let's get into multifamily syndications. Where is the money made for the syndicator or for the general partner? Where does that money actually come from? It's based on fees and it's based on carried interest and what you actually own. And there's a ton of different structures out there that exist. I retain 25 to 50% of the carried interest in every deal I do. If I don't, if I'm not a complete, like I'm taking control of it and I'm gonna run it, I'm gonna be 25 to 50%. That's why I'm expensive and that's why I don't do many deals. Most people with 250 to 500 for capital raising, you can't make the same demands I do whenever I go into a partnership. And so it's like, all right, well, let me find maybe a smaller deal or maybe a smaller operating group to be a partner with, massive capital, for instance, where they've kind of created the pathway for you. Um, and then learn the business. I know you don't, it's not probably the number because raising capital is sales and marketing. It's not running a deal. You're not managing, you're not doing anything with actual operations for the most part. Um, if you learn the operations as like a secondary to the sales and marketing, it actually makes you so much better at raising capital.
Why would you say that?
Because investors test you. The bigger that you get and the bigger checks you get, they test you and they don't tell you. They secretly ask you and they say, hey, upon takeover, day one, you get the keys. What's happening from from the ops side? And
Yep.
you can either say, we're going to take over, we're going to send new takeover letters, and we're going to listen for the next 30 days, and then we're going to start implementing policies, and then we're going to start turning the rent roll, and then in the 90-day period, we're doing the exteriors first, the common area, and then we'll start on the inside. That sounds like a business plan that has been thought about and planned and in place versus what most people do in the capital raising side that don't know how to answer that. I am not sure. Let me get you on the phone with somebody who else can answer that question. What is that signal to the investor?
You don't know your deal.
Yeah, so then the person that you pass them off, I've been there. I didn't know this
Hmm.
stuff. I didn't know it at grants and I raised a lot of money. So it's not like you can't raise money, it just makes you a lot better. I'm saying on the back end of it, the better that I got on vetting the deal and understanding NOI and debt and returns, risk adjusted returns, and explaining the risk profile. That's how I raised 2.25 million bucks for the Levi. Um, I got people to choose the Levi over value add deals, and the value add deals had better returns on paper. And I got people to choose this deal because of the risk profile attached to it and the execution risk behind it and the return difference. This is a 16 to a 17 on paper, and I'm competing against 18 to 20. Okay,
Wow.
what's the execution risk in comparison to brand new, better location with loss to lease and no actual operations execution versus value add, where you got to turn 72 units within the first 60 days. Good luck. So, risk adjusted returns because I'm the person that looks at these deals, it's like I was able to win a little bit more on the investor side of it for the raise. So,
Yeah. Crafting a story is so
yeah.
important. And that is something that you have taught me many, many times. I want to talk about crafting a story about a deal. But before we do that, Gabe is so good at talking to investors. If you guys have had any pushback from an investor, he is the best one to try and
Yeah.
learn from. So if
That's
you
just
have
because I
any
have the most
questions,
experience. I
well, that's
have a
true.
lot of those. I have a lot of those calls. They're not fun.
So if you have any questions, please put them in the chat. We want to get to them. We want to get you those answers, get you some help with how you've been talking to investors. So please put them in the chat. We'd love to answer them live on the air. But let's talk about the story and why the story of the deal is so important.
Well, the investor isn't going to underwrite the deal unless they're smart and they're active and they just choose to be passive. Um, And the only way for money to show up in the bank is for them to make a decision. And if they're not going to do all the active part of the business and like underwrite it and feel confident about it and then make the decision based on that confidence, there's only one other way that they're going to make a decision. It's for conversation to happen between me and the investor. This is the deal. This is how it works. This is the projected returns. What questions do you have? That what I just explained is the story. It's just a conversation. Now how you frame it and the information that is coming in, like Frank, I just did it. I just told a
Mhm.
story with the Levi in comparison to a value add deal when I could flip the story and say I'm raising for a value add deal and somebody brings up the fact that they're looking at investing into a brand new 2023 product with a little bit less return. Okay, well, these are the reasons that we should do the value add. Like you can break a story into you can break a deal into a story that is well perceived by the investor that sounds like an opportunity and they should make a decision and send the money in a fairly quick period of time. So that's again, it's storytelling and sales is like the same thing. Um, I see a lot of people over confuse people. And
Yes.
so whenever because you think it is a complicated business that you're raising money for, being a GP, but as an LP, everything should be simple and the story that they get should be simple. And I see a lot of people say, hey, the IRR is 22%. And most investors, most capital raisers and most GPs don't know how to actually solve for IRR and what IRR even is. They just know it's attached to a return metric, let alone retail investors that are running a business and don't know anything about returns. They think IRR means irrigation or like something crazy where it doesn't have like they don't look at it the same way that Wall Street does. And so hey, we're buying a piece of real estate. The developer started it in 2022 and they just finished it. Obviously, you've seen what interest rates have done. They definitely didn't prepare for that. And so they leased it up extremely quick, leaving a lot of upside for us. So we don't even have to go in and swing the hammer. We don't have to fix anything. It's a brand freaking new property in an amazing location, primo location right between Tampa and St. Pete. And rents are $1,000 cheaper than the downtown product and downtown St. Pete product. So it's an incredible opportunity. There's $300 of upside and there's zero execution risk outside of us managing the rent roll. I just made that deal sound so sexy in comparison to what most,
Take my money. Take my
yeah,
money now.
yeah. So it's like, the story is you got to get them excited. It's selling. It really is, but not in the fashion of like a high pressured car sales guy. Of like you got to put your money in. This is the best deal I've ever seen in my entire life. Oh my goodness, it's the best thing ever. Like nobody's like shit. What are you gonna say about your next one? You just put yourself in the shoe. So yeah, hopefully that helps. I could talk about storytelling for days and days and days and days. It has a double-edged sword. Like the better that you are, the greedier you can get. So you gotta watch out for it. You gotta manage expectations well. I always want to be wrong in a good way. You'll never be 100% right in this business and underwriting and anything like the returns that you're telling the investors, they're not going to be the returns that you're telling the investors. I hope you know that. It's
Right.
targeted returns, and the project is either going to do better than we anticipated or worse than we anticipated. It's never going to go 100% to the 5-year pro forma ever. If anybody tells you that, they're lying and they're trying to take your money. Now, you want to be wrong in the good way, where you did better than what you anticipated. I take that approach to like everything, the business, deal room, everything, our sales process, and most importantly, investors. That Missouri portfolio that I raised money for
Right.
to freak you out. um, that deal is paying to the property level 12, and we told investors 8 in the first year. And then we told them 100% cash out refinance in year 2. It's going to be a 2x on the refi, and then we'll keep it, and it will pay 10 to the property level, with 2x out of the deal, tax free. No investors are anticipating that, like at all. That thing is a home run. Seller finance, insane returns, unicorn, 100%. So, and that deal filled up in a week. It's 60s product in the middle of nowhere, Sedalia, Missouri, 50,000 people in there total. $1 million or 1.2, 1.3 in 10 days from start to finish.
Okay, but like, how did you do it though? That's what I want to know. How'd you do it in 10 days? Because
12
everyone's
tech
told us like location means everything. And look, if it's not in a great
doesn't.
market,
I mean, it does, but returns mean everything. Like, guys, like we're in a bit like our jobs is to allocate capital to the best returns with the least amount of risk. Best returns with the least amount of risk. So location, it heavily weighs the risk. Like if you're in the middle of nowhere and you're in the business of leasing apartment space to people, well, clearly you're going to take more risk in a smaller market than you are in a bigger market. That's just supply and demand. Okay, what's the cost basis that we're entering at? And what's the current income that we're buying? And what's the worst case scenario if we didn't hit any rent increase and nothing happened and it stayed as is? Can we still make sense of the deal? Yeah, 100%. So to give you the actual answer, um, I raised $1 million for Daytona Palms in June of 22, and since June of 22, I've been building my list pretty
mhm.
much. I didn't have that big of a list. Um, I've done a really good job at managing expectations with investors saying, hey, I own like you're only gonna see maybe one to maybe three deals from me this year. I only go after the best deals because of where I'm at. You see what I'm doing. You see that I'm young. I use my age to my advantage. Do you believe that we're going to create something big? Like, are you in agreement that this is a long-term 10-year, 20-year, 30-year, 40-year decision for us? Yes. Okay, perfect. Great. So within the first 5 years of my entire career, I say no to a lot of deals, a lot of singles, doubles, and not triples. I say no to a lot of deals that I could say yes if my main thing was syndicating deals and getting fees. But that's why we have to do them. So I lined the storytelling up to be really good of like, hey, when I text you and when you get the call, it's real. Like it's real. Drop everything you're doing and pay attention. This is a home run. And that's the management of expectations that I've done with all of the investors. Not going to be that often, but when I call you, like you better have money.
I love that.
And so
Create a
that's the
sense of
story.
urgency.
I sent 12 texts, just so you know, and that was it.
12 texts. Oh my gosh, you're so cool.
I sent 12. No, I don't. I mean, I think it's cool, but still.
I think it's cool.
Well, the deal was insane. That's why. I sent a lot of texts and a lot of no's and a lot for the Levi. The returns are fantastic for the Levi. I think 16 to 20. Uh it's a 6x to give you it's a 6x over a 7-year period. Uh it was a seller finance deal. We bought it at a 7.5 cap, 50 grand a unit. Rents in place for 614, and we just got a new lease at 975 plus
Oh,
55 bucks for water. Um uh and it's
slam
selling
dunk.
finance. 75% is a $6 million loan at 5% for 5 years. I'm like, yeah, yeah. So that deal kicked ass. But it was like, hey, here I'll go find the text right now just so you can see it. Let me find it. Rob Donovan. It was not uh
Not
here.
the typical text that you normally send.
No, because I have you have the typical one here. Hey Rob, I have a unicorn seller finance deal that I'm partnering and raising money for. It's a 152 unit seller finance portfolio in Missouri. It's prepped and ready to close in 2 weeks before the end of the year. I'm only going to current investors. This deal is not, in all capital, not normal from the return standpoint. Let me know if you have any liquidity to place before the end of the year. That was the one text. I emphasized not normal. And as long as the deal, as long as the deal that you're serving up with that statement matches, then it should go well. But you got to know what normal is. I know what normal is because I've raised 2 deals for normal. And then I have the second one, I'm like, how am I going to tell this story? It's not normal. Let's let's call it how it is.
Gosh, I love that. I have a question in the Q&A. It was asking that they do not have a background of, they haven't closed it, haven't had a full
Yes.
cycle deal. How do you handle that question when you get asked by an investor, how many deals have you gone full cycle on?
So Grant, number one, has raised over $1 billion online, hasn't gone full cycle to any of his investors, just so you know. Number two, I haven't gone full cycle on any of the deals that I've done. That's blanket statement number one and two. So get over this barrier that that's not possible because you haven't done a deal or haven't gone full cycle. There's a difference between going full cycle and then doing a deal. I've done 3 deals now, but I haven't gone full cycle on them. So I have a little bit of track record, but I
Right,
still, have you done it before? No. Have you done it before? No. Have you said, okay, you say you're going to hit 15 or 16 or 17 or whatever the number is. Have you done it before? No. If the answer is no, bring somebody else in that is yes. Period. Unless you have an audience of 15 million people that people will invest with you regardless. Grant is an exception to the rule. I would not, just be real. If you can pull up your phone, you can make one post and $25 million pulls up to the
yeah.
counter. Okay, you got something different. But if you're going through it the slow and the hard way, like uh yeah, you're gonna need some help. Like very like at the beginning.
So
100% leverage somebody else who has already done it and be willing to, like, if you can't sit at the table with whatever you're currently doing, serve the table until you figure out how the person that got the seat sat down and then do it. And then take the hand, like, I see so many, like, I served that table. I
right,
still, like, it depends what table we're talking about. I sit at some tables now, but like I'm still serving a lot of bigger tables. That's never ending. But if you're not sitting at any tables and you have this like, oh, I gotta partner and give up the majority of the deal to somebody else. What the heck? That's crazy. What's mine? Like you got to be willing to give up and eat the dirt a little bit at the front end. Um, Probably not the sexiest and like nicest thing to hear, but it's the truth.
but it's the truth.
Yeah,
Leverage is your
I,
power at that point.
momentum. I got to create a book about momentum at some point at the end of my lifetime because I can pinpoint like you just my first job was Marcus Millichap. I failed the test 3 times. I
Forgot about
passed it on the fourth, and then nobody said yes. Like, hey, I could work for free. That's the only thing that I had. I looked at myself. I was like, well, I have no experience. I have no money. I have no network. I have no like none of that. What could I do to provide value or solve a problem or like be top of mind for another person that's ahead of me in life? And so I worked for free for Marcus and Millichap. That was my momentum, like my
it.
break. And then I went there. I did all the shitty work that nobody wants to do. I served the table so I could get around people that were making $1 million a year or $5 million a year. I was like, whoa, that's crazy. This is real. Like yeah, I'm taking the trash out and I'm doing the sucky stuff, but shit, I'm in the room. Like I get to hear those conversations with these like and then I took that momentum and I leveraged it into Cardone Capital. Hey, like I knew what cap rate was. That was cool. And I was just willing to pick up the phone and I was willing to work 12 to 14 hours a day. Again, serving the table and willing to sacrifice. I think it's the short-term sacrifice for a long-term gain. I've used that in every area of my life. And so it's like the seeds that I planted 5 years ago, they're sprouted this year or last year. And so the bigger the seed that you plant, the longer it takes to sprout. But typically, it's going to be a year, maybe 2 years, where you're like, man, I'm in that beginning phase. I'm going through I refer to them with my sales guys, the trenches. I believe that they are the trenches, and I believe that you have to spend some time there to develop the character. I see people that try to skip the trenches, and then
Hmm.
you're very clear, like you don't know what you're doing. Conversation's ended.
It's true. It's true. Another question is, where are you finding your investors?
Everywhere. Everywhere. I wear a hoodie to the gym. I raised 400 grand from the gym for the
No
league.
way.
I raised, yeah, so I wear a hoodie to the gym every morning. I got to get one for the bowling stuff, but I still wear Grant's hoodie. It says cash flow is king. Cash flow is king. Raised 400 grand for the Levi. I just go to the gym every day. Cash flow is king. I wear this watch sometimes too. So it's like people look at you funny, but then some people
Right.
like, I like that, man. I like that. They're either on the come up, they're like, man, I'm getting in the game, or do you own real estate? I'm like, let's talk,
Do,
man. What's up?
do I
You're in
own?
real,
Let's talk about
yeah, you're in real estate. Oh, cool, man. Yeah, I saw the cash flow. What do you do? I'm in apartments. Oh, that's awesome, man. How does that work? I've never, like, you don't sell homes? Like that's what everybody thinks if you're in
it.
real estate, you sell homes. Tell the world they're everywhere. You just don't tell enough people. Show deals too. If you're not like if you're not looking at deals, show deals that you're raising for, or show deals that like if you're gonna do stuff with Massive, go look at Massive's track record and leverage their track record and say I'm getting with this group. Look at what they've done. Now you're attaching your reputation with somebody that's above you, and then you're like, you still are a risk premium. However, you're a little bit less of a risk premium because you brought somebody in.
That's so cool. So you were at the gym because now I can't get off of this. You had this awesome
That's just
sweatshirt
one.
on.
They're everywhere.
I
Social
know,
media too.
I
That's
know.
probably a big one.
Social media is big, but what did you say to them? Someone's like, "Oh, that's a cool sweatshirt." What was your 30-second pitch to them,
What
if
do
you
you, well,
remember?
do you invest in real estate? That's what I
Mm,
wanted to know. Because sometimes they don't have money. And respectfully, like I'm focused. I'm like, where can we help you? If you're on the come up, we got plenty of things that we will help you. Um, are you an investor? Cool. What do you do? Do you own a business? Do you have money? Like, I'm gonna call it out is when you work at Grant, you get direct to the point. How liquid are you? Now I don't say how liquid are you, but do you invest? What do you invest in? What do you do? You're a doctor, you're a physician. Two business owners and two doctors. They both knew each other. So it's a group of four people that sit in the sauna that make money and they have single family homes and they're like, man, I hate being a landlord. I'm like, okay, perfect. Who's the profile of the investor that we're looking for? People who don't want to be active, but they make a lot of money and they want to be passive. Um, and that was not a, hey, I'm wearing cash flow as king. Now I have this deal. How liquid are you? Do you want to invest? It was, hey, nice to meet you. I see you every day. I'm doing this, you're doing that. I'm looking at deals. Here, let's check. Like if you want to see, let me just show you. I hate telling a story without being able to show something. You need pictures, you need deals. Like people need to see it. Let me show you Daytona Palms, or let me show you the Missouri deal, or let me show you the Levi. This is the type of deals that like, hey, we just closed on this. I raised a lot of money for it. If you invested in this deal, let's say you invested 100 grand, I'd pay you 500 bucks every month until we sold it. And then once we sell it, I'd send you back 180 grand. And then you get the tax benefits. Everything's passive. You put the ACH thing in the portal. That's it. Perfect, man. Let me know. Let me know when the next one is. Like people want to invest. You have to let them and I'm going through this right now. Sometimes you are your biggest bottleneck. Like you are stopping a lot of the things that could happen if you just let them happen. People
yeah,
want to come to you as long as you're good. Number one, you got to be good. That's a non-negotiable. Rhetorical. You got to be sharp. I think knowing your stuff is really important. In a world full of capital raisers that don't know anything, standing out and being sharp is like one of the easiest ways to stand out. Um, Build relationships over a long period of time and know it's not going to pay off today. The seed that you plant.
stick with it because it does come eventually. I mean,
Yeah.
from the half of the stories I've heard from you, not even today, but yesterday included, it's all about going with it, staying with it, and being persistent and being open and being able to ask those tough questions. It,
Boring.
it
It's the
was
most
hard at
boring
first.
thing. It's the most boring thing in business, but it's the one thing that has to be there. It's boring. It's boring. It's boring, not sexy at all. That means you're good. That means you're not going through fire hat, like you're not going through it crazy and a lot of change. When it gets boring, you know that you're good. Just FYI.
I love that. And with that, I am going to head to our presentation one more time just to show you guys. So there's Gabe
Ooh.
at Massive Capital. We have a system. It's a CRM. It's called Client Harbor. If you do not have a CRM that you are using, CRMs are so important when it comes to raising money. You got to have something in place. It's going to help you keep track of all those conversations that you have with people. Like Gabe talked about, all the people he met, the people who said, "Hey, get me in on the next one. Let me know when the next one's happening." You got to keep all that information somewhere. And we have the solution for you at Client Harbor. So click that QR code on your screen. If not, just send us a message and we will get that for you. We do have a 14-day free trial to get you started, to show you all the ins and outs about it. Our next is our coaching program. We have a capital raising coaching program. It's a hands-on experience to help you do even more than you're doing right now. What you've learned from Gabe is he told us to find mentors, find people who are raising capital and doing more than we are. So that's what we have put together, and we want to see you as part of that. Our last thing is a hackathon. I didn't know what a hackathon was until a few weeks ago. Hackathon is hacking plus marathon equals hackathon. And this next hackathon that is on April 20th is about raising capital. It is a full day, one day, where you will learn as much as you possibly can. Bring a pen, bring a pad of paper, and bring an open mind, because it will be stuffed to the brim with so much information about raising capital. You will be ready to jumpstart your capital raise journey as well as your GP journey on getting onto deals and raising capital for deals in the future. So that is what I have. Thank you so much for everyone who's been here today. Thank you, Gabe. Do you have any final thoughts for our community today? Anything you want to leave us with?
Yeah, play the long game. The long game is where you want to be. It's the game that lets you last and play forever. Don't play the
Love
short
that.
game.
I love that. Play the long game. Well, thank you, everyone. My name is Maria Marks with Massive Capital, Massive Masters, Raising Private Capital. Thank you all, and we will see you on the next one. Have a great evening, everyone.